Hello and welcome back to the Money Control live stream. You are watching Markets with Santo and CJ. Well, LIC's IPO turned out to be quite a muted event, right? The stock is currently down about 8%, but that has not deterred the bulls out there. They have totally seized control of the narrative on the Wall Street today. If you look at the Nifty and Sensex, they are set for their second straight day of gains, Santo. And it looks like globally also things are sort of improving at this point of time. All the sectoral indices NSE were just a sea of green, which was wonderful to look at, by the way. And if you look at the fear index as well, the India VIX, that also fell around 4%, which was hinting to me that there was a little bit of short covering also involved, apart from some long positions that were being taken.
Well, you're being quite charitable when you say it was a muted response. It's been a bit of a disaster, especially for high net worth individuals, many of them, most of whom, in fact, they buy just for flipping gains. And I'm sure a lot of retail investors too would have bought the shares in the hope of cashing out quickly.
Yeah.
And those plans have been paid to.
I don't want to say I told you so, Santo, but I'm like itching to say it, but I will not say it.
well, as for the longer term investors, I think this is just part of the normal market cycle. I think it makes sense to kind of hold in there, as valuations still are reasonable, I would say, more so after today's correction. So perhaps if you have bought into LIC during the IPO, then I would say that this is a time you should not be selling out in panic, rather holding on to them.
Yeah, perhaps it is a good opportunity for those who actually, took the prudent step of not jumping into the hype and buying the IPO from the onset. Maybe they were anticipating this sort of a correction, and maybe you will see those individuals and investors who wanted to add LIC into their portfolio as a 10 to 15 year sort of a story. Maybe they will take advantage of this, but at this point of time, we are not seeing any sort of dip buying coming into LIC. It still remains close to its day's low. So it will be very interesting to see how the story develops in the coming months and weeks, right?
Well, and it also remains to be seen how this will affect sentiment for other
upcoming. Going by today's evidence, it doesn't seem like it is going to affect the sentiment of the street so far. But yeah, IPO's delivery, definitely you saw that the subscription was very low, and I mentioned it in our Money Controls listing show as well, that right now IPOs will also be judged by valuations, as you have been talking about how stocks are being judged by valuation. Probably the same method and same narrative also goes for IPOs.
Yes, definitely. When you saw the Paytm IPO bomb in November, one almost got the feeling that after that any IPO that came would take a beating, but that's not been the case. You saw quite a few IPOs.
Some have been successful.
Yeah, many of them have been successful. Of course, the reasons varied. In some cases, low floating stock, but in some cases, probably the market saw it.
I mean, you look at Campus's IPO was quite a success, even though it came bang in the middle of a very, very weak market.
Exactly. So I think the focus now again is going to be purely on valuations. Market is going to be very, very choosy. Just because the LIC IPO did not do all that well does not necessarily mean that it's bad news for all other IPOs as well.
Yeah, that said, let's quickly dive into some of the stock action that was buzzing on the street today, starting off with Santo.
Yes, Voltas, and although as CJ has been repeatedly referring to the sea of green today, I would start on a bearish note. The first stock is Voltas. Now, the stock has been under pressure for the last 2 or 3 weeks now. The fourth quarter numbers were a disappointment. What was most worrying actually was the steep loss of market share. The management also indicated that customers had become very, very price conscious and were willing to kind of flip even if they were getting 2 to 3% less, and that's bad news. Besides, inflationary pressures led to steep fall in operating margins. These apart, CJ, these are now fairly known. If you look at the technical side of it, both in the futures market as well as in the NSE stock lending and borrowing window, there seems to be a huge build-up of short positions. Already, Voltas futures are quoting at a slight discount to the spot, which normally happens when there is a lot of people excessive bearishness and people go short on the futures in a big way. That apart, there's about 7 lakh shares of Voltas outstanding in the SLB. You don't see such huge volumes. Someone has taken the pain of borrowing those and then dumping those. besides that, all the technical indicators at this point are showing extremely bearish. So,
Santo, your case actually is making me more and more bullish about Voltas. I'll tell you why. The stock movement that we have seen, the collapse in the stock price that we have seen since the earnings, was largely led by the shocker that the company had lost market share in the fourth quarter, and it seems like it came out of the blue for a market leader like Voltas. But Voltas management also went on to suggest that they will be able to win back a lot of that market share in June quarter itself, and probably in September quarter they will be back in the same place that they were 2 quarters ago. So that is the fundamental side, right? Now, when you talk about excessive bearishness, that tells me that I see that as a contrarian indicator. That excessive bearishness could actually be a trigger for a short squeeze on the stock. The moment the sentiment for this company turns around. Let's not forget, AC demand remains a structural story in a consuming country like India, where per capita income is increasing, overall economic growth is quite strong. If you talk to a lot of the industry people, they talk about a robust demand scenario, at least on the ground, at least in the urban and discretionary demand space. So I feel
there is robust demand. It just seems to be that Voltas is not getting that at the moment, and that perhaps explains the market share loss.
At least in the March quarter, that was the case. But I believe that they will get their act right, because they have been so great over the past few years and decades that I don't for a second believe that Voltas cannot turn this picture around. And you will see that happening in the coming quarter as well as in the September quarter. And the moment market gets a hint of that, you will see all of these short positions getting clobbered, and the stock probably could see a very sharp rise. So I will be very careful going short or going negative on Voltas when bearishness is already at such an extreme.
Well, just one short point before you move on to your next stock. This is one of the stocks which is not too far away from its 52-week high and neither too far away from its 52-week low. So it's been moving in a narrow band for quite some time now, which already shows that there's some discomfort on the valuations bit. So unless you see some really strong numbers for the June quarter, I think you could see the stock sliding further.
I believe we will, but I was talking about excessive bearishness and that leading to a sharp up move in the stock. Look at what has happened to Hindalco in the industries today. Not so long ago, I was telling you that this is a great opportunity to buy the dip in the stock, given that the longer term outlook remains quite bright for the company. And today, with the news coming in that China is likely to start easing its lockdown in the industrial complex of Shanghai, possibly from June, the city has for the first time 3 consecutive days of zero COVID cases, which has really triggered a rally all across Chinese stocks as well as metal stocks globally. And that goes to show that sometimes near-term bearishness can overshoot, and that actually gives you an opportunity to go take a contra trade on a stock. And for me, Hindalco anyway was a longer-term story. If you look at the tightness of supply in aluminium market, lack of investment towards aluminium production, and now possible demand coming back in the construction sector in China, we are going to see price hikes all over again, Santo, in the later half of this year. And therefore, Hindalco today, I mean, the bulls will be laughing to the bank, whereas the bears will probably be shedding some tears.
See, you're pinning a lot of hopes on the China reopening. Now, if you see the April numbers, what we actually saw was that among other metals, aluminium production was high. And so were the exports. So that partly explains why globally aluminum prices have been slightly soft. They shot up all the way to plus $4,000 per ton and then collapsed as quickly. The second reason for the collapse in aluminum prices is that clearly there seems to be some pushback from the user industries. We are seeing that also, which is why prices are coming off, and hence the bearishness on all aluminum stocks. Lastly, I think what is worrying Street the most at this point is that the capex plans announced by Hindalco, about $10.5 billion over the next 3-4 years, which means that margins are going to be under pressure as Hindalco takes on more debt for that.
I told you also earlier, Santo, that capex will not be that much of a concern as the Street believes, because the company is going to fund at least more than 50% of that through the free cash flow it is generating, which it has also been able to generate largely because of the price hikes that it has managed to take and the improvement in margins that it has seen. And let's not forget that the demand story is not only external for Hindalco, right? It's not like that just that China will come back with a major stimulus and they would try to revive the economy, and therefore the demand will only come from China. But you have also US, which is trying to invest in the infrastructure space. Plus, at home, we have been talking about how the auto cycle is turning around, and we are seeing recovery there. So I would not be surprised if the domestic demand itself could be a very big trigger for Hindalco and a further re-rating in the stock.
Well, see, there is legitimate reason for the market to be worried about, because we are talking about some really huge numbers for debt. About 68,000 crores is the kind of debt that Hindalco has, and net debt still is quite huge, even after you account for about 20,000 crores of cash on its books. Besides the accrual that you are talking about and the free cash flow, that's also contingent on aluminium prices remaining buoyant and the demand also being as strong. Now, will that happen? We don't know yet. For now, market is worried, and that's why you're seeing the pressure on the stock. Well, yes, there has been a pullback, but that's not just been restricted to Hindalco. You've been seeing it across the metal space, all the stocks which took a beating.
Well, because the trigger is largely the same,
So China. I think I would be a little cautious, betting
I think your caution is totally unfounded, but that's your choice.
Okay, Alkem Lab, third stock on our watch list today. The stock is now quoting close to a 52-week low. The quarterly numbers have been fairly a mixed bag. In fact, it's left the street quite cold. However, there are reasons also of why probably this stock might be a good bet for the longer run.
Okay.
So margins were under pressure for a host of reasons. Very clearly, input prices have been rising, price erosion in the US, and also the product mix has not been all that great. But according to IFL, the domestic pharma business is set to grow at about a compounded rate of 11% over the next 3 years. Besides, the management has indicated that FY23 is unlikely to be a great year in terms of margin pickup, but FY24 onwards things should start looking up. So a lot of the weakness, the bearishness is already reflecting in the stock price. It's come off quite a bit. But that's how you kind of grow your wealth in the market. You get something cheap because there is a reason for that.
Sometimes things are cheap because they deserve to be, Santo. And in the case of Alkem Lab, the earnings outlook has deteriorated considerably, especially after the March quarter. I mean, you look at the management commentary. Two products which account for almost 45% of the sales in the domestic business are in themselves under pressure. The pain management, pain relief, or the pain management segment, which is one of the biggest contributor to sales, is seeing slowdown. Also, you talk about 11% domestic growth, but it's largely in line with the entire pharma market. It's not like it's outperforming the pharma market, and therefore, given that domestic sales account for 70% of the company's sales, then it can outperform, right? You have the India business which is slowing down. You have the US business which is under pressure because of price erosion. Let's remember, Alchem was probably one of the first pharma companies last year to come out and say that they are facing price erosion, and then other companies also joined the bandwagon. So when you talk about earnings, when you talk about margins, the margin guidance that they will see decline in gross margin in FY23, all of this does not raise the risk appetite within me or make me very excited about this company, right? There are better opportunities even within the pharma pack, leave alone the rest of the market. But even within the pharma pack, there are better opportunities out there, even if valuation may be comfortable, as you say.
Okay. Fair point.
That's it. One stock, I talked about the turnaround in Hindalco. Another stock that is seeing a turnaround today is Graphite India. It seems the story is largely the same. Of course, China is a major factor for Graphite India as well. The likely end of COVID lockdowns going ahead in China will become a trigger for possible short covering in Graphite India. With China possibly going to invest a lot on the construction side of the business, which also might boost production for steel for the near future. That could result in greater demand for graphite iode product prices, and could boost margins for Graphite India, as we saw in 2021. So even if you look at it from a technical point of view, yes, a lot of the money controls technical indicators at this point of time are blinking bearish, but some of them are also suggesting that the stock is in extremely oversold territory. So any sort of pullback in this stock could be very, very rapid and very, very sharp.
CJ, I buy the fundamental side of your argument. It does make sense, the whole thing about China reopening and demand for going up. But there's something that makes me cautious about Graphite India.
And what is that?
Yes, just look at its price chart over the last 5 years, and you'll know what I'm talking about. A high all the way up to 1100 plus, then a quick correction. Now, that's not the interesting part. Stock prices do remain volatile, especially for commodity companies. That's not really a surprise. But in this case, if you see, 2019 was a blowout year in terms of earnings, net profit of close to about 5,000 crore for the year, and yet the stock price started crumbling much before that. Despite quarter after quarter the company reporting good earnings, the stock price crashed from 1100 to about sub 500 within a matter of just few months. This despite the earnings improving. Again, if you see FY21, the numbers were quite bad. In fact, the company reported a loss for the whole year. This year, FY22, the numbers have been improving, the operating numbers have been improving, and yet despite that the stock peaked out sometime in October with the rest of the mid cap stocks, and since then has been going downhill, even as the company's operating performance has been steadily improving. So that makes me wonder, why is that, what is that market is really concerned about, when they can see that at least 2-3 quarters ahead, if the earnings are supposed to be good, typically you would see the more buyers getting into the stock. That's not happening. So that's something that really surprises me, CJ.
Santo, I believe yes, market senses possible earnings downgrade 2 to 3 months ahead of when it actually happens, and this is a classic case of that. The earnings outlook for Graphite India was not looking very bright in the December quarter, in the March quarter, given that the Chinese economy had started to slow down. A lot of the stimulus was being taken away, and you saw that in the general crack in metal stocks as well across the board in September, October. But the story is now improving steadily, right? The China slowdown that was there got worsened by the fact that lockdown happened across several big cities and industrial manufacturing areas in China. But now, with the Chinese government itself suggesting that they want to invest in the growth of the, in the revival of the economy, they have given a very ambitious target of 5.5% GDP growth in 2022, even though almost 3 months have been taken out by COVID. So that is something that makes me bullish, that the possible decline in operating profits or operating income go in the June quarter, in the March quarter possibly, could see a bump up again when the September and the December quarter comes around.
Well, that's what I'm saying. The operating performance is improving, but the stock price is not catching up.
The stock price had already declined in anticipation of a weak December and March quarter, right? And possibly June. But now I believe the revival is also happening already in the stock price in anticipation of maybe a good second half of this year.
We can squabble on that endlessly because when the company was reporting poor numbers for the September and the December quarter, China was not in such an intense lockdown.
But it wasn't a slowdown. It was already started to slow down.
And that slowdown doesn't really change even now. That
Santo, if you don't want to believe me, you don't.
I know China reopening is your theme for the day, but I'm sorry, I'm not so convinced about that.
It is a big story that is developing today.
Well, the last stock on our watch list, CreditAccess Grameen, I beg your pardon. Good operating numbers for the fourth quarter there, and according to most analysts tracking the stock, this is one of the best bets to play on the microfinance upcycle. You're already seeing that things were pretty tight till about 6 to 9 months back, but that's clearly changed, and also you're seeing that in the form of better disbursement and also improvement in the asset quality.
Santo, we need to still be a little cautious about here because the microfinance space is something that is very volatile, right? While disbursement
just like your graphite rods.
Oh, come on. The disbursement might have improved, but the company still has to show whether these disbursement levels will sustain probably in the June quarter, in the March quarter, in the September quarter, especially as inflation starts taking greater toll on consumers, right? Secondly, the microfinance business itself is quite vulnerable when it comes to economic shocks. Given the shock of inflation that we are now going to see with the RBI raising rates in anticipation of that shock, I would want to see another quarter of this sort of a performance from CreditAccess before I change my view on the stock.
If you wait too long, CJ,
you're
never going to catch
I don't think 3 months is going to take away that much from me in terms of upside.
Well, on that note, let's quickly have a look at the market before we wrap up this session.
We are looking quite healthy.
There are a couple of things. I'm sorry, CJ, I just missed that out. You will point to something that we missed.
Absolutely, I will.
Market is now at the day's high, but no cheer for LIC. 873 is what it's quoting at, down about 75 rupees.
Yeah, and we have actually seen more gains in the market, Santo. We started off the show around 2% higher, but now the Nifty is about 2.6%, the Sensex is about 2.5% higher, and the Nifty Mid Cap 100 is about 2.8% higher. So we are seeing very, very aggressive follow-on buying happening after the sort of a break in selling pressure that we saw in yesterday's session. And mind you, a lot of this buying is also happening on the back of great volume. So the increase in volume plus the follow-up buying, I feel that things are starting to look up for the bulls, and we could see a decent pullback in this market for the remainder of this week.
Slightly different view. The higher volumes today is basically more people using this as a sell on rise rally.
Oh, come on. It is not because of that. It's the comeback. I'm telling you, it is the comeback. You wait and see.
So, CJ, you have something interesting for us which goes beyond fundamentals, technicals and derivatives.
I think you're going to find this very funny, Santo, because given your skeptical nature as such. But what does black magic and bear markets have in common, right?
I don't know.
A Rajkot-based stockbroker, right? Recently, you know that when bear market comes around and you say that we are currently in a bear market, people tend to look for bizarre explanations as to why it is happening. Sometimes they will blame short covering. You remember in March 2020, everybody wanted all the short sellers in the market to be put in jail behind bars and not allow them to participate in the market. And sometimes they blame black magic for it. Apparently, a Gujarat-based stockbroker who is actually a SEBI-registered research analyst recently claimed on his Telegram channel, which by the way has more than 1 million subscribers, that he has put in almost 8 crore rupees to use black magic to what do you call it, engineer a crash in the stock market that we saw from the past 6 days. And if you look at it in terms of if you quantify it, the crash was as much as $235 billion in terms of notional wealth. And this gentleman, if I may call him that, has taken total blame for that, suggesting that it was actually his black magic that actually triggered this fall. And it's a very weird story that we put out yesterday on Money Control, and I would recommend you to go and read it. But that is what happens in bear markets, doesn't it, Santo?
Well, CJ, is he in hiding or is he still going around business
as
usual?
His channel is thriving. He is totally going about his business as he has always been doing. And it seems that his actions or his claims have miffed a lot of people, but it has also drawn a chuckle from a few, maybe people like you who have seen it all and done it all. Well,
yeah. So what are we looking at? What is there on the horizon for?
Well, earnings will definitely, we are heading into the last leg of the earnings, and Bharti Airtel will of course come out with its numbers shortly. You will also see DLF coming out with its number possibly after market hours. So investors will be reacting to those two numbers. Apart from that, ITC, the big meme stock as they call it, will also be announcing
meme stock turned value stock.
Oh, yeah, we'll see about that value part.
30% rally from its, over the last 1 year. Tell me how many stocks?
Every dog has its day, Santo. Every dog has its day. That said, Lupin and ITC will be key earnings to watch out for in tomorrow's session. Apart from that, globally, the Federal Reserve Chief Jerome Powell will be speaking later today, and it will be interesting to see what Powell has to say after the recent data that has come out, and with the recent data that has come out, especially out of China, whether he talks about the external threat to the US economy and there's some softening of language on the Federal Reserve front. That will be something to really watch out for. So these are the 3 things that I will be keeping my eye on.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed watching it. Do share your feedback in the comment section.
And also follow us on the links that you can see at the bottom of your screen, and have a rest of the trading session, great trading session. And we will catch you live at 9 AM tomorrow sharp. For rest of your updates, do stay tuned in to moneycontrol.com and the Money Control app.
Thank you for watching.
Thank you.